Good morning, good morning. What's up, everyone? How's everybody doing? Good to see you all. Hey, Raj. Okay, let's get to it. Welcome, welcome to Tuesday the 13th. And got some interesting dynamics happening in the market. Our overnight inventory was short. And it's still short because all of the trading, except for the last half hour, has been below the close of the previous day. So when the trading's below the close, they say inventory is short. 84% short now, and now we've had a correction. And you'll notice price is just hovering right near the close. So the object of business is accumulation and distribution of inventory, right? So we have inventory here between, say, 40 and 60. Be good to sell it here. Now, if we have a lot of buyers come in, we can sell it above the close and between the previous day high. If you have a lot of buyers, you'll be able to sell it above the previous day high, right? But what if you have like mediocre, lukewarm buying? Well, then you can try and sell it between 60 and the close, because you'll still make a profit. So let's take a look at that. Okay. So you've got that inventory, and this is how you determine. That's like kind of normal business. That's better business. And that's really good business. This is a sales chart, folks. It's just a simple sales chart. So this is the accumulated inventory, and this is where we're selling it for profit. Better profit is up here if we get lots of buying, like a Black Friday sale. Get all those people pushing up against the door, right? Trying to buy product. And if business is really good, we take it above. Okay? That way, excuse me, that way you can manage your expectations. So say you're long here, and you see everybody is selling here. You probably want to sell a little there too. Because if we can't get and sell above the close, that means we don't have the buying. So we're probably going to do this. Okay? So manage your expectations. Do we sell here? Do we sell here? Or do we sell up here? How do you manage your expectations? By watching the people who actually trade size. So if I'm trading 3 E-minis, right, and Josh is trading 3,000 E-minis, and I see that Josh is selling them here, and I'm long here, well, I'll sell with Josh. Makes sense. Just manage your expectations, manage your profits, manage your risk. That's the name of the game. That's the name of the business. Okay? This way, you're not hoping for a 30-point trade when you're not going to get 30 points. Right? Manage your expectations. Much easier to manage your expectations and actually, make some profit. That's what you want, right? So let's go take a closer look and see what's going on. There's that inventory. It's all underneath us. We're distributing it up right at the close. And I tweeted this out like an hour ago. I said this is where they're going to sell it if the buying's kind of lukewarm, right? But it's enough. If you're positioned under 54 and you're selling it at 67, it's a good day, right? And heck, we got all the way up to 85, but it didn't hold, right? That was just some emotional buying, forced buying, short covering when we took the previous day's high. Remember, if I zoom out on this puppy, you still got a gap. You got a big gap, right? Yeah, there's a few missing teeth at the top of that move. Looks like those NHL goalies from the 1970s. Right? So, as short positions go, right, our big short position is between 54.71 and 58.01. That's where the gap is, right? And the next short position is the overnight low. That's where the shorts are bid to cover. And the latest batch of fresh shorts are trapped under 58.60. Okay? Hey, Bill, what's going on? So these are the shorts that are trapped from early yesterday, later in the day, last night, and the fresh meat is trapped under 58.60. So we'll look for bids when we come down there. Okay? We are... well, we had a material change. Okay? So how does the market adapt and digest material change? Thanks, cash flow. Good to have you with us. Right? How does the market digest that material change? You listen to Adrian Duplessis. Oh my God, he's still alive? Wow. It's crazy when somebody brings up on YouTube a name that's like 30, 40 years old. I haven't heard that name in at least 35 years. Wow. Or 30 years, I'd say. That's crazy. Whew. So, yes, and Vancouver is crazy. Not so much anymore. Right? Real estate is the business there now. There's no more stock exchange, unfortunately. Oh, a 1993 video? Oh, okay. Yeah, that's when I started in the business. I started in 93. What's that, Jaden? The backfill? The backfill. The backfill is when we take a market up and you get a bunch of people following price, and then we can sell them a lot of stuff at higher prices. Digesting the market move? Yeah, a lot of people, I don't know why, but if you read the older books, and I'm talking books that are like over 100 years old on markets, they're much more practical. They kind of tell you what's going on. The stuff these days is kind of flowery, and it really doesn't have any guts to it, right? We really didn't have any, like, how do you actually, okay, great, this is the market and this is what's going on, but how do you make money off of it, right? And how do you do so as a retail investor, as a retail trader, right? Things were simpler, but the business hasn't changed. It's just gotten much more efficient. So if you think of the market as a system to deliver inventory, Timo, it has become insanely more efficient, right? Now we can sell 300 contracts a second, whereas in the old, you have to sell 300 contracts in an hour, right? Like 100 years ago or something like that. Right? How did you guys know that a company was held by only one entity? Agatha, that's the business. Do you know why you want one entity to control a company or have multiple entities with different names control the same company but are controlled by the same people? Because you want to be the only seller. You always want to be the only seller. Having exclusivity means that you can charge whatever price you want, right? So the more competition you have, the more you're going to have to discount price. The less competition you have, well, now you're having a good day. So how are we going to trade this kooky thing? I hope we don't open up on another gap. Let's take a look. My balance zone this morning was 58.39 and 3/4 to 43 and 3/4. Double it to 51 and 3/4. Double it to 67 and 3/4, and double it again to 58.99 and 3/4. So we are now in the 8 times profit zone if we stay in this green area. Right? We have sellers here. Our sellers are right here, right at 71. Okay? Now what does that mean when I put that there? And you'll find that it's creepy and it's accurate. Because when you can expect where the sellers are, if you're long, that's where you can sell too. It helps you if you're a short seller as well. Like say you're shorting, right? If you are shorting 70, well, you're going to put your stop at 71, 72, and then you're going to bid the 68s here, right? So if you are short 70, stop is here, and you put some bids down here just before this level to see if you can get tagged. That is shorting the backfill. We took the market up, that created demand. Now we're going back and filling that demand with supply. But the problem with shorting the backfill is you can't get greedy. Because what happens is, as soon as it gets to a level where the sellers see buyers lined up, they see them lined up like outside of Walmart, they go and they raise price. So when you short the backfill, there's nothing wrong with it, but just manage your expectations. And if you were short 70 and you couldn't get anything at 68, 68 and a quarter, grab the offer and get out. Pay yourself, right? When you're learning how to trade, I strongly suggest you pay yourself. It's great to hold trades longer, and it sounds really good at the country club, right? When everyone is boasting. But when you're learning how to trade, there's nothing wrong with taking profits early. As you get more comfortable and as you understand how to manage your trades and the actual business of trade management, then you can hold longer. Now, the business of trade management sounds a lot more complicated than it is. If I was long at 69 and I had my stop under 68, I'd put some sell orders at 69 and a half, 3/4. Then I'd put some sell orders at 71 and a half. And I would be selling here. Now, if I was a larger trader, right, and I wanted to hold for longer, well, I would spread my sell orders out. So if I'm long 68, 69, against the bottom of these candles, that's where your insurance is. If the market can't offer over 72, you got a decision to make. What is your level of conviction that says the market's going to go to 73, 74? I can't predict, and I'm not good at predicting. So I use my sell orders to tell me whether or not that trade is worth holding longer. So if I had a 72, 72 and a half sell order in, and I was long 68 and I couldn't sell anything at 72, well, I got to manage my expectations, right? Otherwise, it's coming back to where I bought it. What's the point of being long if you don't make any money? I would rather be long 68, 69 and sell 71, 71 and a half than get nothing. Does that make sense? There should be some common sense in this, right? You got to kind of read the room. So if the candles are tight and there's not a lot of follow through, what's the point of holding till 73? And then having the market come back under 68. It's a tricky market to trade, Jim. It's not the easiest market to trade. And the thing is, it changes every day, right? It changes every day, and sometimes it changes multiple times within the daytime frame or the nighttime frame. That's why I do 99% is watching, 1% is execution. Well, this is how larger traders do it, Jaden. How you manage the trade is as soon as you're long, you put sell orders out. Now, if you're trading 1 to 2 contracts, it's very hard to do that, right? But if you're trading 10 contracts and you're long 68, I mean, I would have been gone at 71. I'd take my 3 points. Thank you. Goodbye. Because I see that there's no follow through over 71. Does that make sense? And because my sell orders would tell me, oh, nobody's taking it up here. So if I got a 72 sell order and nobody buys it, what's the point in me waiting for 73? Doesn't really make any sense. Especially before the market opens. So what time is it? Is it before the market open? Right? I don't like holding the trades through an open. How many scalps do I average on a day? Yeah. Sometimes I'm actually average three to six. To be perfectly honest, 3 to 6. I haven't I didn't trade for a week when I was moving. So I kind of am getting back into it, Rosemark. Right? So I've taken 2 trades today in Globex, just scalps. I've been teaching a lot too, so I haven't really had a lot of time to trade. I'm very selective. Do you know why, Rosemark? Because I'm cheap. Right? I was trained by savage old men and women. People who are worth hundreds of millions of dollars but took the bus to work. And it was beaten into us, and we lived in constant fear of losing money. Because if you lose money or make bad decisions or have no discipline or screw up a lot in the brokerage industry, you only get maybe one chance. Then you're unhireable. And the only job you can get really is like, selling hot dogs outside the brokerage firm. You'll never work on a trade desk. So we're very, very risk averse. That's old school, right? I really like to wait for an A+ setup. An A+ setup is a setup where the market does this. And this is a trade I got to take a little earlier when it did the look below and fail of 58, 52. So I bought some at 53, right? 53, 53 and a half, right? Put my stop here, and I sold it into this. Right? Couple of points. Right? The old man that ran my brokerage firm, old Mr. Thompson, he was worth about $600 million, and he worked in the business and started in the Great Depression. And he used to sell investments door to door. Right? So he told me when I started, he said, listen, kid, all these flashy guys come and go. Your goal is to be here in 20, 30 years. You still want to be in the business. And you can't do that if you blow up all your money, because then people won't trust you with their money. Right? So before we start, a little bit of promo for the room. We'd love you to come and visit us at thetradingsyndicate.org. Use the promotional code, which is right here at the bottom of the banner, to get 25% off. We have a great community of traders, and it's a helpful community. Give us a try for a month. I promise you, we'll teach you more in a month with us than 10 years anywhere else. And that's information you can actually use to make money. No BS, no fancy words. No, I'm not cutting. I'm plugged in. It's a YouTube thing. Early morning was great. I think now we could be having. If it's cutting off, just try refreshing it. That's the problem with YouTube. Yeah, we do want to stay in the now, you know? Predicting is really difficult. Predicting often leads to heartache. You know, when I started retail trading, yeah, sorry guys. I've got good internet. Hold on, folks. Let me see what I could do. Am I back? Please be patient. I got 500 download and 645 upload. All good? Okay. uh, is Trump speaking again? You see it all downloads in the background. Hey, now James, keep it family friendly. All right, so 9:45. Be careful. Here we go. We're up and open, and let's see where the bid comes in. Okay, so we opened up here at just under 58.70. Remember, folks, take your time. See where the market's going to go find the bid. Right. If we stay under 67, we'll come down to this 60 area here, around 58.60. Right. Look for responsive bids here. Remember, the market's a little out of whack, right? You got a massive gap underneath us, and when that happens, business gets a little, well, how shall I say, strange. Nobody really wants to come in for size. Right? There's really no bid support at 68. No reason to go long. See if those 63 bids are still there. I went long 65, just off the tops of these, just off these candles here, and I sold into the 67s, 68s. Just because I saw a rotation, not an A+ setup at all. I just saw a rotation. Now, can we stay above 68? We know there's sellers here. They've been there for a while. Nice trade, Jaden. Ah, okay. Thanks, Raj. Thanks for the tip, Raj. See if that works. I trade my own capital and I trade for old clients. I don't use a prop firm. I trade for about 3 or 4 people. Sometimes 2 to 3 people, sometimes 2 to 4. I've been in the business since '93. So most of the people that I used to do business with, I still talk to. The ones that are still alive, anyway. Oh, there we go. A little bit of a stop run. We stopped right at the previous day high. Now we're going to have to take a run at that previous day high to get up above it. They're selling into it at the previous day high, so they're going to backfill it now. Right? Backfill means go back and fill in that demand that they've created with supply. As soon as they find big buyers, they'll do this. So when the market goes down, it's looking for buyers. When it finds the buyers, the offer will lift. If it finds that there are no buyers here, the offer will go underneath this level here. There, see? And they'll sell it down to around 58.70 if they have to. You know, I completely forgot about the M spike base. Was it M or was it N? Oh, there is an M spike base here. Yeah, Raj, it is working. Right here, where M took out the K high, right? Yeah, you can't tell on the iPad. There's an M and an N. But we held the spike, right? No, 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 look at M, right? Trust me. Look at M. You got single prints. Look where we came to. Look at the spike base that I drew out. Yeah, it's easy to not see it. Right? I missed it too until Raj pointed it out. M over K high. What's up, LC? There's an N1 too, but N1s are not written about in the old market profile books because N period didn't exist 30 years ago. They changed the hours, remember? Yeah, that was Raj catching that. That wasn't me. Oh, look at the point of control is up at 58.75. Good distribution. They're coming in for it hot and heavy. So now, ladies and gentlemen, if we accept, I'd say over 58.77, okay, and you short this thing, and it comes down to 58.77 in bids, meaning find support, be careful, okay? You're okay now, but if we get over 77 and we can't get back down underneath it, be careful on the short side. Because once this market has people trapped shorts, the way the order books are so thin that it can get out of hand very quickly to the upside. It's not as stable as we would like it to be. It's much more stable than it was last month, right? See how it's working that area out now, 77? Going back and forth and back and forth. See, look, it bids again. It was bidding 76. All it takes is one or two large traders who realize they're trapped under 76 short. All it takes is a couple of them to come in for size, and if they come in for size, kapow, you get that big green candle. And what is very, very, uh, what's the word I should use? Um, what gets people is this price action. It's kind of jerky and it doesn't look strong, right? But do you notice it's steadily creeping higher? I mean, if you were short 74, right, you're feeling a little pain right now, right? If you were short under 72, right? Now let's see how long this 1 minute backfill lasts. Right, we got a backfill candle here. Do we backfill for a couple of minutes? There we go. That's good. It's dropping in. Watch 77, 76. Do we bid 77? Just watch price at 77. If you're watching this and you're not in a trade, you'll be able to absorb the information. If you're in a trade, you're not going to be able to absorb the information. But just watch how it goes back and forth over 77. Right? Okay, that's good. We needed selling. Now let's look for 74. That's healthy. 74 to the tick. Now, can we get back up over 77 or are there sellers here? Yes, my bias is influenced by overnight development. However, if overnight is short and doesn't correct higher, then the market's trying to tell me something. If overnight is long and doesn't correct lower, then the market's trying to tell me something. So my bias has to be adjustable, right? I can't have a fixed bias because that's how you blow up accounts. The hardest thing I've ever had to do was learn how to trade against my bias when it's wrong. I found that one of the hardest things in trading. And people would say, well, you have to hold two correct statements in your head and know them to be true. I'm like, yeah, but how do you execute on that? I couldn't figure it out until I used the look below and fail to look above and fail. Because if I'm biased short and it can't stay under 77, well, they don't need to sell it under 77, so I shouldn't be short biased. Right? If I'm biased long and they can't get it over 78, 79, well, there's a seller there. Right? So you take your bias, but you have to see, is my bias, is my bias a real world bias or is it just some sort of fancy flight of fantasy? Right? If my bias is a fantasy, I'm not going to make any money off of it. Right? There's 77. Look how it's bidding 77 now. And you can see it so clearly on a 1 minute candle chart. Look at the lows of those candles after the dip down to 74. They're holding 77. So I was a little short biased when it broke 77 on this candle here, right? I was like, okay, we break 77, 74, and I was like, oh, we come back down to 67. Tag 74 right back up, and the next two candles confirm that they don't need to sell under 77. So you get that move back up. Let's watch it again and see what it does. This current candle can't get down to 77 yet. Let's see if it can. We got 40 seconds left of this candle. And none of this I would have been able to observe if I was always in a trade. Because I have no attachment to the outcome now. I don't care if it goes under 77 or if it does or if it doesn't. Right? I have no attachment to the outcome. So I can observe it, and I can observe what's going on. Now sometimes if it's slow, it'll tag the level and move up. If there's more participants, it'll sell under 77 and pop back up over it like it just did. Either way, I know between 75 and 77 there are buyers. So I don't want to be shorting 77. That's how you use that in a common sense. That's how you use it for common sense information that you can actually use to execute. I did a trade earlier up 7. What do you want to know? That's why we have the room. There's a ton of material on how to execute, and I do execution labs. Right now, there's no business reason for me to take a trade. It's choppy. So, for example, when I trade at the edge, when the market does a look below and fail, I'll buy that, put my stop here, and sell at the levels higher. And I apologize if you're just joining us for the first time. Right? So for example, right, this is not something that I would be doing, but if I was buying this right now, if I was going long 78, right, you go in, let's see, buying 77 and 3/4, right, if I was buying this, my stop would be under the bottom of that candle. Now I know that it's chopping around, right? I know it's chopping around. So if I'm long at 77 and 3/4, where's my risk? My risk is at the bottom of these candles right here. Because I'm looking for that rotation higher. So I'm long 77 and 3/4. I'll have my sell order, just for this example, at 78 and 3/4 because I know that there's sellers here. And if it breaks 76, then the reason for my trade is gone. Does that make sense, up 7? But that's not a trade I would take because it's suboptimal. Yeah, I know, but some people are execution, right? The reason I'm explaining it to him is to show my thinking, right? Most retail traders will not actually ever be successful because they can't watch a market. All they care about is execution, right? That's why I tell people to watch a market. But I'm a professional trader. I've been in the business, right? So that's why we don't make stupid mistakes in the business, because we're trained not to. You got to train yourself not to make stupid mistakes. But if you're always trading and making stupid mistakes, you don't learn anything, and you blow all your money, right? Steve, guy's still good cheap, right? So when you're long, you've got to say, okay, Say I'm long 78, my stop is 76 or 75, and I know there's going to be sellers up here at 79, so I got to sell too. Right? And if you want to hold a runner, put some sell orders out at 81. There you go. And you're taking it at 81. And if you still got some left, sell into it. Right? And that's the execution part of it. Right? Yeah, there's a ton of information in the room. Really, at 50 cents a day, I challenge you to find a trading room that will actually help you make money. Exactly, Mike. Now let's see, can we take out that overnight high? There's going to be some stops at that overnight high. So if I was long and I still had contracts, I'd be selling them before the overnight high. Because I don't know if we'll take it out and come back in, take it out and go up. So I know everybody's going to sell 85, so I'd be selling 84, 83. I always like to front run levels. See how there's a seller at 84? Size, smart money will get out before the overnight high. See, everybody wants to sell at the overnight high or on a breakout of the overnight high. Professional traders will sell before it because they have to sell size, right? It's okay to take profits, folks. You don't have to, hold out 30, 40 points on one trade. Eventually you will. You'll have those trades. Just kind of learn what you're doing first. And now we're in distribution. You're challenging me to take trades? Well, I'm just trying to teach people some stuff here up 7. If you're not interested, you know where the door is. I'm doing a YouTube stream, right? Yeah. Well, Hey, you know what? We haven't had one of these guys in the room for a while, so I just put in my I just put in my sell orders. So as soon as I'm long Mark Collins um, or Gerard, I'll just put my sell orders in. And if the market doesn't take out my sell orders, I'll just get out. I used to trail my stops. In faster markets, I couldn't move fast enough. Now watch out if you're short. I wanted to go long 87 against the overnight high, but I screwed up the trade and I got in long at 88. So what I'm going to do is I'm going to put a sell order out at 90 and see if I can get taken out. And if I can't, I'll scratch the trade or at least hit the bid. Yeah. Oh, out one at 90 and then I got rid of the other one at 89 and a quarter. Not the greatest trade. I was trying to buy 87 and use the overnight high as a stop, but I screwed up the execution and I got in at 88. Not the best entry. Using the overnight high as a stop because people would be short underneath it, so there should be buy orders there. Okay. Might get a chance to take that again. A little slow now. What I'd prefer is a look below and fail of the overnight high. Then I know that the sell orders are complete. There we go. It didn't even backfill as where I wanted to. Um, I can't really speak to Jim's logic. I have a very simple way of trading Ghosh. And I don't know if we've spoken about this before. You'd have to ask Jim to explain his logic. I don't think it would be fair for me to explain another person's logic. You know what I mean? I have a lot of respect for Jim. Um, that's why I wouldn't want to try and explain how he thinks through something. Now, Mike. What I like to do, Gerard, is when it dips down and goes under a level that I'm watching and then comes back up, it tells me that the sell orders under that level are completed. So when I that way, if it does this, I can buy some here, put my stop here, and then put my sell orders out. I like a level to get tested. The reason is because then I know the sell orders underneath that level have been completed. Once those sell orders are completed and there's no follow through selling, then the market will rotate higher to find sellers at a higher price. Well, it depends on the trade. So if I was doing a look below and fail of 87 and 3/4, I'd be buying 89, using the bottom of these candles as a stop and selling at the next level. That's it. Do you guys understand how I phrased that? So if you're going long here, your stop is there. Okay? Real simple. The market dipped under that level and came back up. That's where I go long. The reason for the trade is that nobody needs to sell under that level. My insurance is here. In case somebody does come along and offer it under 87, there's no business reason for me to be in the trade. I'm out. Right? Then I sell at the next level. Right? So I try to buy 89, 88 stop, 80 or 87 stop, 87 half stop, and I'm selling into that 91, 91 half. It's not the best example because it's a short distance between the levels, but the theory is the same. So you're long, you stop, you sell. Now, what if you have 5 to 10 contracts? You sell some of them here, and then you put sell orders and let the market take you out. Now, I don't know how much more clear I could be on execution. Right? I think a golden retriever would understand that. Right? Long, stop, sell some. Sell a little more. Sell a little more. I just take what the market gives. Right? I just take what the market gives. I've been trading for 33 years. I've been doing this. It's not going to be your last trade. Retail traders pretend that this is the last trade I'm ever going to take because I'm going to take these trades and then I'm going to retire. I know I got to go to work tomorrow. Would I consider looking at look below and fails at the extremes of composite balance? Hell yeah. That's a big Texas 10-4. As long as my risk can be managed in an intelligent way, Slippy D, I'm in. Listen, if the trade makes sense, I will participate. Right? And the way you worded it, that makes good sense. It's hard. Retail traders are really taught a lot of different stuff. I don't know where the hell it comes from. but I've never heard about it. And they're asking me about all sorts of stuff. What was that guy asking about yesterday? I had no idea what the hell he was talking about. Right? It's a simple business. The investment bankers make the donuts, the salesmen sell them, the traders deliver them to the customers. It's really not that complex a business. Looking for 58.99 and 3/4. Yeah, it was some Mr. T or something like that, right? The Mr. T trading system. Just try and keep it simple. Right? If you can't explain the business reason why you're going long, you got no reason going long. Now we're going to distribute a little bit here, right? And these little sideways candles here, what they do is, it's quite fascinating. If you hold price steady, it'll attract buyers. It's fascinating. Do a little watching. I'm not telling people not to trade. I'm just trying to say, maybe kind of learn what you're doing before you just taking trades. Looking for 95 and 3/4. I do not see a short at all. I do not see a short at all. Yeah, Raj, from Staines. Right, we are still in the front end of this move. And let's see if 99 and 3/4 right before 5,900. Let's see if it slows down there. Ugh. Well, I guess when you got a short position, you got to milk it for everything it's worth. I really don't want to draw 16 of these. Draw 5 for now. I'm refusing to draw many more, Jaden. We need some liquidation now. Come on. Don't hog all the contracts wholesale. We need a good liquidation. Gosh, I hope nobody I know is short under 58.60. I mean, if you look at the move, look how the low of the RTH couldn't even get to 58.60. It's pretty brutal. Nothing wrong with a quick scalp, right? As long as you get in there, steal it, and get out. Nothing wrong with that. No, Mike, not 500 quick scalps. Got to get your wife to get you a hobby. Get you out of the computer room. Yeah. Hey, Alex. How you doing? Alexander, AZS. I would love to see a pullback so we could get long a little bit. They're just hogging all the contracts up here. Oh, thanks, Suzu. And something I was when I did I was looking at this weekly and I thought, we're going to have some resistance at 58.40. And so far, we really haven't had any. And on the NQ, I thought that 20,500 would prove some resistance. Nothing. Nothing. And we are now above that 200 on the daily. For those of you who are into the squiggly lines. No, Howard. No, no, no. It's not a look above and fail. Howard, we're still in the front end of the move. Don't short. Just leave it alone. This is where you, Howard, are at the most risk. If you do short, put your stop at 59.01. Okay? If you're listening to me? And don't move your stop. Okay? If you have to short. Because it's still looking above. Right? We need it to fail. Yes, value moved up, Milan. Do I use any real-time order flow? Yes, I do. Agnostic thoughts. It's a very secretive, very expensive piece of software. It's called a 1-minute chart. It's a very highly sophisticated order flow tool, right? The bottom of the candles are where the bids are. The top of the candles are where the sellers start to compete. Sorry, I'm joking around with you, but right, that's all you need. You don't need volume delta or any fancy stuff like that, right? I'm trying to save you guys money so you don't get rooked into buying some $2,000 software suite. Oh, this is just, oh, they're really, they've got some people really trapped short. And they just realized it too. I'm cheap. I don't want you guys to spend any more than you have to. That's why we only charge 50 cents a day for the room. Right? We want to keep things cheap because it takes time to learn how to trade. It takes time to learn how to execute. So all you need is a 1-minute chart. That's all you really need. You don't even need market profile. Oh, I don't want to do 16 times. Somebody go sell 200,000 contracts now. Come on. Probably. Right? I'm sure there's some news, right? I don't read the news because I can't react enough, so I just watch the chart. The chart tells me everything that's going on. Profits today? Yeah, I made about 300 bucks. I've been teaching a lot today. My girlfriend's got me on this exercise program, so I had to do my 10,000 steps. So I didn't get a lot of trading time in. I'll trade a little later tonight. What I'd like to do is I'd like to wait until it starts going sideways, and then I could do some like rotational trades. It's not backing off yet. If you want to learn how to execute quicker, it's just a matter of practice, Spicy. It's just a matter of practice. Just put in the reps. You'll get there. It's really hand-eye coordination with your trading software. Try doing this like, if you're a long trader, right? Put in your long, put in your stop. Practice doing that like 1,000 times. 1, 2, 3, 4, 5, 6, 7. Oof. 8. Now, for all of the squiggly line crowd, when we came up over 58.70, right, it would not be unreasonable to think that some buying programs kicked in as well that would buy when the market gets above the 200 moving average. I am not aware of how they work, but it should be mentioned. Yeah, you're going to have to use the old toes to count now. That's a good thing. Practice on the micro, right? Look what happens, LC. Well, here's the thing, right? Now we're backfilling, folks. If you're short, you want to look for 59.04 and change. If it takes out my stop, I'm gone. So if I'm doing a look below and fail of say $5, right? So it looks below 5, comes back up to 505. I buy 510. I got my stop at say 490. If it takes out 490, I'm gone. If it stays above 490, I'll give it as long as time it needs to work as it takes, depending on the type of market, right? In a slower market, it might take longer. right? So taking out the 4s, your ultimate target is this 58.99 and 3/4. Finally, you got to move down. That's good. That's good. That's good. Let's look and see if we can get down here. Jesus. Anywho. So, folks, we're going to have a price action lab today at 11. Those of you who are in the coaching class. It was a nice backfill. It was a nice backfill. Now it gets unpredictable. Let's see what happens next. Oh boy, oh boy, oh boy. What's our next big levels to the upside? Where's our next swing high? I think our next swing high is up at 59.21, 22. I'd say 59.22 and then 59.28 are our next large swing highs. After that, it's all the way up at 6,048. I'll throw that in the room. Now, in those days, at the end of February, beginning of March, a lot of that inventory is probably cleaned out, folks? Because we're not seeing a lot of selling from above. The people who are selling into this are the people who are long under 60, which, I mean, if you were long under 60, you'd be selling into this too. Oh, what's next? You don't have to look at volume, spicy. Really, my preferred way of trading is just trading off a 1-minute candle chart with some lines, right, with my levels on them. See how clean this is? There's really not a lot to deal with, right? It's just so clean. You know? You can really see where they stop selling. You can see where they start selling. Right? You don't need volume on here. Let's see here if we can get up to 11 3/4 now, folks. Right, so just use the levels. So say you bought 59.06. Use 4 as a stop, and then sell into this. Sell into the 10s and the 11s. Right? Because if you bought 59.06 and you're selling 10, 11, that's 4 to 5 points. 4 to 5 points On 3 to 4 contracts, do that trade a couple of times a day. And your risk is defined, right? There's a business reason why you take the trade. There's a business reason why you have the stop where it is. Oof. We're 100 points away from 6,000. Unbelievable. Really unbelievable. They flushed this market all the way down to that 48.70, 48.60 level. And now we're trading 5,900. It's another big margin robbery, Mike. Just like COVID. Thing is, how are you going to hold through a 600-point move down? You can't, right? So it's just basically all they did was they held everybody upside down. They shook all the position out of their pockets, grabbed it all, reset the cost basis, just like we said weeks ago. What are they doing? They're resetting the cost basis. Right? Remember what did Niederhofer say? Right? You come in, you give me money, I give you goods. Then later I take back your goods for less money. At the end of the day, I have all your goods and all your money. Victor Niederhofer, Education of a Speculator, Chapter 1. He used to trade for Soros. If price LBFs then later fails to break the open of the LBS, supply is shut off at that level. That's right, Agnostic Thoughts. You're right, Raj. The only the best chapter of that book is the first chapter, and it's available online. The rest about he talks about tennis and walking around with a glove on his hand, and I don't know, all sorts of crazy stuff. Looks like we got a little rotation going here. Let's see if it holds it. This is what I've been waiting for. Anywho, that's it for me, folks. Thank you for joining us. Want you to come and visit us at the Trading Syndicate, formerly Microefutures. We do have single prints. So this is our short position here. This big green box. So we'll see how much of that we can retrace. Thanks, everyone, and I'll see the folks in the coaching class in the price action lab in half an hour. Thank you so much. We'll see you tomorrow. Bye for now.